This is the wrap-up for the live market open for Monday, March 23rd. Let's see what we have in markets. We have a general slide of the US dollar from last week's highs, but in general, the moves are quite limited, quite a slow start to this week. Very, well, it's not surprising at all. It's a long Easter weekend. Good Friday was slow. We had, and now it's holiday in quite a few countries, but the United States is not on holiday. On Friday, we had GDP coming out better than expected in the United States. That's the final read for Q4, 1.4% better than expected. We now know that Q4 wasn't that bad, but we also learned last week from quite a few figures that the first quarter isn't so good. So if you're looking for any kind of momentum in the US economy, it's hard, very hard to see it at the moment. At least it's not slowing down. Today we have quite a few releases in the United States. We have the most important one is the Fed's favorite inflation measure, the core PCE Price Index. It stood on a strong 1.7% last month. This time we don't have expectations for year over year, but the rise month over month is expected to be slower. Okay, 0.2 instead of 0.3. We also have personal spending and personal income. If all figures move in one direction, for instance, if they're all positive, it's positive for the US dollar. If all of them move in the other direction, negative, it's easy. That's the straightforward case. The not so straightforward case is if we have mixed figures, and then I would focus on the core PCE price index. We also have pending home sales at 2 p.m. GMT. Okay, let's look at a few charts. See here a question, I'll get to that at the end, just cover a few charts. Euro dollar rising, this reflects the weakness of the US dollar in the new week, but the movement is extremely shallow, narrow, 111.70, resistance at 112.15, support at 110.70. I don't think we'll have a challenge of these ranges today as it's a slower day. Pound dollar, more exciting this morning, 141.72 is the current level. 141.75 is some kind of resistance, followed by 142.40 support at 140.50. Very strong double bottom. Dollar yen a bit sliding at the moment from the highs. It made a move to the upside in the Asian session. Resistance at 114, support 113.10. Dollar CAD sliding, stronger Canadian dollar alongside stronger oil prices with WTI crude oil just slipping under 40 as we speak, but it already traded above 40. Bouncing, and last week it was hit by higher inventories. So support here at 132.20, resistance at 133. Aussie dollar a bit more choppy, 75.35, resistance at 76, support at 75. And the Kiwi dollar hugging the 67 level, 66.20 and 68.20. Are lines to watch. Question here. There's a question in the YouTube chat from Joseph Gio. I'm not following that. Sorry. Please write your questions here. Anyway, I'll still answer this question, of course. What's the reason for interest rates or QE if central banking governors like RBA's Stevens could simply talk up down the currency value? Well, in general, central bankers prefer to talk and not act. Well, they're human beings like everybody else, okay? So they'd rather not keep their ammunition, their powder dry, the tools in the shed, whatever you wish, in order to really deploy them when necessary, only to scare markets when they want to, and not shoot, okay? In the case of the RBA, they would like a weaker currency to make the commodities that Australia exports cheaper. To make them more attractive and provide more income in domestic currency, and also other stuff. It can help other parts of the economy. It also makes Australians prefer buying local products instead of more expensive imported products. When the Australian dollar is strong, imported products can be more attractive. So usually the central bankers try to talk down the currencies, okay? When they do talk, when they don't have any other choice, when they have exhausted this verbal intervention, they do try to, they do shoot, okay? So, well, we didn't have a rate cut in Australia for quite some time, but in New Zealand we did have recently a surprising rate cut, and that hit the Kiwi, of course. Yeah, so central banks, currencies move by expectations, so central bankers can guide markets, can guide currencies by talking, but eventually you can't just talk. You can't just, let's say, wave with the rate cut without really cutting the rates, because then nobody will believe you. The power of verbal intervention is the credibility, okay? So there's a limit to how many times they can cry wolf without acting, of course. Okay, well, I hope that answers the question. Anyway, thank you very much, everybody, for coming this morning. Slow morning to start the week. It gets much busier later on, I'm sure. Yeah, drug effect certainly is a great example of what we've seen about talking. Yeah, in this case, the ECB introduced a huge stimulus package, but then Draghi said, we're done for now, in other words, and that turned everything around. Anyway, thank you very much, everybody, for coming. Wish